All right.
I guess we're starting.
I think we're
I
rolling.
think we're good.
Let me just close this and we'll go. I think some people are trickling in, but welcome to the Cash Flow Queries webinar series, episode 2.
Sounds very official.
No, I like to force myself to say that. Cash Flow Queries webinar series. This is episode 2, and today we're going to talk about cash flow conversations. So thank you to all who have joined us today.
Yes, thank you.
All right, so today's agenda, we're going to work through some housekeeping items. I will talk a little bit about our background, and then we're going to jump right into some of the different types of conversations that we can have, and then we'll do Q&A at the end. So let's start with housekeeping. There is a Q&A box here within Zoom. Please go ahead and use that. We have allotted time at the end to answer your questions. So please, as a question comes up, just go ahead and pop your question into the Q&A. Background, let's do an intro.
Yeah.
Who are you?
I'm Kelvin.
Who are you?
I'm Kelvin,
Where
CFA.
did you come from?
Who are you?
How'd you get in ES building? So my name's Twyla, and Kelvin and I have a accounting advisory firm here in Calgary. We have been in business since 2014.
Yes, it's 2014.
We always question ourselves on that.
Yeah, it's 2014.
Since 2014, and maybe why don't you share a little bit about kind of what our firm's been like and where we came from?
Yeah, for sure. We started out with very different backgrounds. We're not tax accountants, and we wouldn't say we're typical accountants. And so when we started 2080, we had a huge passion for helping small businesses, helping people really improve their business, their financials behind it. We saw a really big gap for people that were really good at selling their service or their widget, but not very good at selling or help or working the financial statements. So we found it really interesting because, the progression of industry is really pushing advisory, and, that term has some nuances behind it.
Yeah.
It's just simply progression. And so what people are looking at is automating away routine work and moving up into more consulting type work. And so we find that really interesting because we actually started essentially just doing that. And that was actually our focus. We actually didn't do any bookkeeping work at the time. We just did a lot of consulting work. And so the progression of our firm has been really interesting in the sense that we've actually done advisory the whole way through. And we especially got forced essentially into cash flow advisory. There was a big recession here in Calgary 3 years ago now.
Yeah, three to four actually.
And that really highlighted the cash flow forecasting and cash management, which we've become huge believers in, because once we really got thrust into that space, it really kind of made us consider how we could actually use that service for other companies that maybe aren't just, in dire need of it, but, could you use it for stable companies? Could you use it for growing companies? Could you use it for companies in decline? And essentially we became really big believers in just cash management, which is why we started an app. So
it's true.
Yes. But yeah, like right now our firm actually handles cradle to grave bookkeeping to advisory to tax returns. We're not tax experts, but we do very general returns. So we live it and we breathe it.
Yeah, absolutely. I mean, as we shared even in the first episode, we have now taken it to the point that we do start to finish. So right from the beginning of bookkeeping all the way through to CFO level services. And we do that mainly to control the workflow, yes, and also to control the quality of the data and the timing of the data. And so in order to do cash flow advisory services, as we talked about last time, you need to have clean data, you need to have timely data, and it was hard for us to have that control when we didn't do it from start to finish. Yeah. So that's what we've definitely evolved to now.
That could probably go into a pre-engagement question that I'm just thinking of.
It probably could. Hang tight. I wanted to share one more thing, which was kind of why we're doing this this webinar series. And for us, now that we've been talking to more accountants and bookkeepers, we have really learned that because we started in this space of, again, advisory, we do have some experience there that, we want to share with everybody. We are very much about giving back to the community and giving back to the industry. And we are open books that we are happy to share anything and everything that we've learned along the way in order to help you with your advisory or your bookkeeping practice or your accounting practice. And so that's really a big part of why we've kicked off this series, is to ultimately share and to get into some ideas, into some topics, tell you about what we've done and what we've seen, and then learn from one another.
Yeah, absolutely. Get rid of the mystery.
Yeah, the mystery.
The mystery.
Unsolved Mysteries. Did you watch that show as a kid?
That was a great show. Yeah. I think you just dated us massively.
Maybe.
Yeah.
I'm only 20. So.
Don't look it up.
So yeah, really, don't look up when that show stopped airing. All right, so I guess I'm terrible with slides, apparently. All right, so let's dive into some of the pre-cash flow advisory type conversations. So what we mean here is you're working with a client, but not giving them cash flow advisory services. What are some of the types of conversations that you can have with those clients in order to dip your toe into doing cash advisory?
Well, and I was just going to interject there because, when we were talking on timing and stuff, I think one thing to even consider before you even get into the questions would be, the timing of the data, because that's a big question that people have surrounding the service itself. It's maybe not a conversation with a client, but it's a question within a firm is, how do you structure it and how do you put that in? And so one of the reasons that we took on bookkeeping was to get the timing down pat, because we always found it really hard to coordinate with bookkeepers and other teams outside of our own company in order to get the timing that we needed in order to have these conversations, just even right off the bat.
Yeah, for sure.
Just want to throw that out there.
Yeah, no, I'm glad that you wrapped that in. So, okay, so let's start kind of with the first point that we've got on here. And believe me, this is not set in stone as to what we're going to flow through. We really want this dialogue to kind of be, again, sharing what we've had for experiences. And even, even though we have one practice, naturally we've had a bit of divide in terms of the clients that Kelvin looks after and the clients that I look after, and we look after very different types of clients. So you'll find sometimes that we've got some different insight on what the experience has looked like based on our clients.
Yeah, so, for sure.
All right, so let's touch on this first one. So, and this is something that, again, needs to come up in conversations that we've had recently with some of our industry colleagues. So I don't know if my client is actually, if my client actually needs cash flow advisory. I think I have a typo in there. Uh-oh. The type A person's going to be focused now. Okay. Anyways, the point being, I don't know if my clients
don't get into journalism.
Yeah, exactly. I'm all about the numbers. I don't know if my clients actually need cash flow advisory. That's what the question has been. That's been prompted to us.
It's my favorite question. I love this question because everybody needs it.
Yeah.
And I always say that. As you know, and this is what we'll speak about, is I really do believe that every single company out there needs cash flow and cash management. The go-to place that everybody talks about is the companies in despair. So people that are in financial trouble, they can't make ends meet, they're super stressed out because they can't make salary or payroll or loan payments. I mean, that's kind of the de facto, yeah, of course they need help. But the reality is that everybody could use cash management and cash flow forecasting. For companies that are growing, so hyper successful companies, they definitely need cash management. If you're continually reinvesting your profits into something and your revenue is lagging behind the expenses that you're outlaying in order to have that growth, you're definitely going to need to be really good at managing that cash. Similar to that vein, when you've got a really good, stable cash cow, so to speak, even those companies are ripe for cash management because there's a certain ROI that you can be providing to your client in terms of, minimize the cash in the bank and maximize the cash outflow to the actual owner. And, that's at the end of the day why everybody gets into business, is they want to make money. And so I'm a huge believer that everybody actually does need cash flow advisory. It's just simply maximizing people's cash position and ensuring that they've got a really good structure and plan in place to, move forward. So even things like having a war chest, so to speak, having that and managing your cash around that.
Yep, perfect. And I think oftentimes the clients that come to mind for me are on the extreme cases. One being somebody who's growing really quickly. They've set up a number of different locations all across Canada. Really, not at my advice, but they have grown too quickly, and they have very tight cash flow because of the fact that they're trying to maintain this rapid rate of growth while having some existing locations kind of help out with the new locations. On the flip side of that, I mean, we have a vet clinic client who, you know, their problem is more so that they're almost afraid to spend the money that's in their bank account, especially the vet's wife.
Yes.
And they want this big war chest, like you said, and you know, is that the best utilization of their money? And so you can use a cash flow advisory piece to help them determine, okay, how much of a war chest should you have, you know, X number of months of working cap or whatever that looks like. And then what can you do with the difference, whether that's paid out in dividends, whether that's investing in something else, whether that's purchasing new equipment, et cetera, et cetera.
Or go on vacation. I mean, that's actually
a
really good example, because that client in particular actually was cash strapping themselves personally in order to make their business improve better. And that was really hard for us to look at, because, you know, the business was in such a great spot. They just needed to have a little bit more debt, you know, so to speak, in the actual company. You know, there is a thing like healthy level of debt. And they were being hyper conservative in their company, but super, I guess, aggressive. They had a ton of debt personally in order to make that work. And it just made no sense to us, where we did some cash management and cash planning with them, and it unlocked a ton of money for them at the corporate level. And they're actually having a comfortable life now personally. Yeah,
absolutely. No, great
so perfect example of that it was a true cash cow company.
Yeah, absolutely. So next question that we've got here is that I don't know if any of my clients will actually pay for cash flow advisory. And I want to just kind of start this one with saying, you know, if you are looking to dip into the cash flow advisory, the clients to start with, and this happened with us too, the clients to start with are the ones that you know desperately need the service. Yeah. And those are the ones that are going to obviously be most likely to pay for that service, because they are having some stress or some anxiety or some sleepless nights over the fact that they don't know if they're going to have enough money to cover off their payroll or their rent. So when you're wondering whether or not your clients actually will pay for it, that's the place to start. And that's where we started. We did start with those clients and then rolled it out to the rest of our clients. But that's, to me, is the ideal starting point. And usually those people, even though they're tight on cash, if they can get optics and some security and some comfort around their numbers, then they will often pay for that service.
Yeah, and we've seen it in the past where people that are actually in a really tight position will pay surprisingly a lot more than you would ever expect for that service than you would otherwise expect. But I think that ties into a concept that we've talked about a lot, which is the emotional component of it. Because those people are really, really emotional about their situation. I mean, they're on the brink of going out of business, and they will literally do anything in order to achieve their end goal, which is success. So that's not saying that you're going to take advantage of the situation. It just goes back to, you know, the primary question of, will people pay for this? I think there's a root level question there of, how do you, as a accountant, bookkeeper, advisor, whoever you are, how do you tap into the emotional side of business, which this is, you know, these companies are these people's babies. They live it, they breathe it, they love them. And so it's, how do you tap into that? And if you can, then everybody will pay for cash flow forecasting and cash management services, any kind of advisory period, to be honest, in my opinion. And I think that really goes back to, how can you allay any of their fears, or how can you reduce their stress, or how can you just make them feel empowered? You know, like, these are all emotional concepts that we're talking about. But they're all super important on the business side, because it's so easy for us to say, well, let's just punch in a bunch of numbers and we'll call it a day and we've done our job. But the reality is these people are reaching out to us as accountants and bookkeepers and advisors for help. And it's usually at a much more emotional level than people appreciate.
Yeah, for sure. And I think that leads really well into the next question in terms of, what do cash flow conversations look like with clients before we start to do cash flow? And, you know, from a lot of the experiences that we've had, and even that others have shared, it doesn't look like, you know, your client come to you saying, you know, what would be really great is if you did a cash flow forecast and I could see.
That would be super.
You know, that's not what it sounds like. It sounds like, I didn't sleep last night because I'm so nervous, or I'm riding the stress wagon here.
How am I going to make my car payments?
Yeah. And you know, you mentioned that these businesses are our clients' babies. They're not just the babies, but they're also the source of income for their families. So they've got this stress of, will I be able to continue to pay my mortgage and look after my, you know, my household financial needs, et cetera. And so it typically will look like things like, you know, when I say I'm riding the stress wagon, I've had a client say that to me. I'm riding the stress wagon right now. Or a client that'll say, I don't even know if I can pay any of my vendors, or I don't know what to do about, I need to hire somebody, but I don't know if I can even afford it. Those types of things are the things that I've heard coming from clients' mouths when it's like a trigger. It's like, you know what would really help here? If you had a cash flow forecast and we could actually see it, and optically you could see it, because there is times that the business is doing fine. The clients just doesn't have enough information to feel comfortable.
For sure. Yeah. And making that, I mean, that's a great point, because making that plan gives them the optics of the future, which again, it eliminates the unknown. Going back to the emotional side, it eliminates what they don't know. They can see it and they can feel it now. It becomes tangible, essentially. You're taking something that's untangible, intangible, however you want to say that, and you're turning it into something that they can actually see and feel and respect. I find that little point that you made there really interesting, because, I've got a client that we've been doing cash management and cash planning for about 3 years. They were in a really in despair during the recession, and they pulled out of it, and they've been super profitable ever since. But their primary question is, how can we pay back our investors all the time? And so it's not even sometimes a personal thing, like, can I put my kids through school? But sometimes it's more this weight on their shoulders of, man, like, I've got other people, other stakeholders here other than just my family, and I need to do right by them too. And that's emotional too, because that's just the burden of, if I don't pay them, I don't feel like I've done, I don't feel like I'm a success.
I haven't done my job.
Exactly.
Yeah.
That's right.
Yeah. Good point. It's not just always about them. Sometimes it is somebody else who's contributed.
Yep.
All right. So we've touched on this other one a bit, but let's go into it a little bit further. How do I sell cash flow advisory services? And, what's prompted this question for me is, talking to somebody just a few weeks ago who said, I'm not able to get my client to commit to sitting down with me to plan out the revenue for the next 6 months. Like, he won't sit down and tell me how much he thinks he'll have in revenue. So I don't feel like I can really give him any sort of cash flow. And this was before engaging in the advisory services of cash flow. He was trying to basically sell his client on that extra service. And so, you wanted to create something optically, which I think is great. I mean, that's what we always suggest if you're trying to get into it, is do a cash flow forecast for a client that is going to be the one who needs it the most in terms of the desperate client. But his question was, well, I can't get enough information from him in terms of revenue. And my counter to that is just to use the existing information you have. So this wasn't a new startup. This client had been in business for a number of years. So you've got some historical data there. You've probably even got a bit of intel from the client in terms of him saying, business is great or business is not great, to know if last year's numbers, for example, are a good idea to use. But just start. Just start by building something out and use your best guess and present that to the client and see then what their take is on it. Telling them, this isn't perfect numbers. This is just a starting point, but I just want to share with you what this would look like. So that's kind of where that question has come in. Yeah,
for sure. And again, creating that plan, because people don't know what they don't know. That's one thing that we always like to say. As you alluded to earlier, a client's never going to come to you and say, I need you to plan my cash. Maybe they will, but typically
not lately.
I've never seen it. And so it is more a question of, how can you present these services to somebody in a way that they can understand quickly and easy and see some benefit out of it. And I think that's a really good case in the sense of, create a plan and show them, and it doesn't have to be super detailed, but the general plan of, if you change these couple of things, your life will look better because, and give them that 1 or 2 simple actions that they can literally just think about in their head and be like, oh man, that makes so much sense. And why would I not want to do that? It's so easy, and I can maybe not make more money, but have more cash in my bank account maybe. And the other thing to keep in mind too, is it's not even about just how you present these things to your client. It's also even how you potentially gear up your own workflow, because we've got people that have, like, people like us that are bookkeeper to tax returns. You got people that are just bookkeeping. You got people that are just tax returns. You got people in the middle. Everybody does things differently. And so part of the question of how do I sell cash flow advisory services really depends on how you're set up. Good point. Bookkeepers will have really good day-to-day knowledge. They'll have really good feel, is what I would call it, for how their client feels about their business because they're working the front line with them. You know, I've often heard bookkeepers describe themselves as essentially psychologists and marriage counselors. And I believe that's true. I think that's a lot of financial people in general, because it is such a touchy subject. Again, going back to the emotional side. But, you know, that'll look a lot different than somebody that's maybe got a traditional tax practice that's trying to move maybe the other way into more managerial accounting. Like that person's really going to need to, you know, get that buy-in from the client and maybe a bookkeeper, and get their workflows really good in terms of how am I gearing up my operations to then sell, you know, to the end client. Because I feel like, and you can interject here, but it's been a really easy sell for us to all of our clients, whether they're doing well or doing poor. It's just the simple interjection of the cash flow forecast and the cash plan in your bookkeeping process. It's just a question of what does that look like depending on your own practice and your own setup.
Yeah, for sure. And that actually brings up that workflow diagram that we shared last time that I think we both would like to make some tweaks in there to really show, like, here's where we put cash flow into that workflow. And again, like I said, everybody does things a little bit differently, but even just to share, this is where we do it and the timing of where we do it within that flow.
Well, and I think that's something to point out, because, you know, going back to what we want to accomplish here, which is help people out as an industry, you know, we don't have all the answers. We've got a few, I would like to think. But, you know, we're looking at feedback from people too. And so even taking that diagram, what I would love to do is have feedback from other people about what their operation looks like, and try to help them figure out, like, what does your process look like? Like, how could you insert cash management in there so it's almost seamless? Like, that's one way to sell something, is make it so easy. That people just, it's not even a consideration. It's just like, well, you're kind of doing that anyways.
It's a no-brainer.
That's awesome that, you know, like, now I've got this amazing plan, like nothing's changed on my side, and now I have to pay like an extra X dollars to get this amazing plan, and nothing else has changed. Like, that's so easy. Why would I not do that?
No, good point. I mean, we're all about making it as easy as possible for the client, just so that then there's less resistance. Perfect. So let's move on then to, you know, the conversations that you have once your client has said, okay, you sold me on this, I'm convinced. What kinds of conversations do you then need to have with your client, or what kinds of questions do you need to ask your client right upon kickoff of advisory of cash flows conversations?
We talked about this morning. I always like to start with the budget, because essentially, you know, with any cash flow forecast, cash management plan, you know your bank balance, you know your AR, your AP. You maybe don't know the timing, but you can kind of figure that out depending on what systems you're using. But it ultimately lies upon what does the longer term trend look like. And, you know, we use the term budget, but it's actually kind of a forecast. Like, you know, to get into the nomenclature, budget would be something that you've got fixed and you're trying to hit a target. So, you know, technically, a budget for telephone expense of $500, we would always want to make sure we're under that. Whereas a forecast is something more dynamic, where you're continually reviewing it in the future. I always use the term budget because you can almost interchange the two. And so that's what I'm talking about. Like, one question I love to answer or ask any client that we start doing cash management with is, you know, what do you expect to spend in the future, and what do you expect to make in terms of sales? So essentially a budget, like, what's your budget for the next 12 months? And that'll give us a good, you know, knowledge of what your cash ins and outs are going to be, which then allows us to help make a better plan. And then it also starts bringing in probably more questions like, hey, I noticed that your telephone bill is actually $1,000 instead of $500. Like, do you have a few extra cell phone bills here that maybe you don't know about? Or are your plans jigged up wrong? Or meals and entertainment? I mean, you've had really good experience with that one in the past, where people spend way more than they think they do. And it's not that they don't understand their business, and they don't have accounting systems in place and they don't listen to people, but they're still a little blind to it until you present it to them in a certain way. And so it's a great kickoff point is, you know, what is your expectation versus what was the reality? And how do you match those? So, you know, it's not even just a question, it's an actual process that opens up so much more dialogue around the situation.
Yeah, for sure. And I think, you know, I like when we talked this morning about the difference between a budget and a forecast, because, you know, whether you call it a budget or a forecast, I mean, I agree with you. I think budget, I mean, I think about that, even my own personal budget. It's like, okay, I'm going to try not to spend so much on
Close.
Starbucks this month. Starbucks is my weakness. I'm going to cut that down, and my new budget is going to be X number of dollars per month. And so that to me is more like a budget versus like a forecast being, okay, here's where I think we're headed. Here's what I think I'm going to have for income. Here's what I think I'm going to have for expenses. And, some of the common questions that I would say that I have with my clients when we're trying to either kick off advisory or cash flow advisory or do some updating to the cash flow forecast is what changes are on the horizon. And I would just refer to this as the client intel in terms of where are they headed and, what changes are kind of coming down the pipeline. Are they hiring somebody? Do they need to purchase some equipment? Do they have some revenue on the horizon that I'm not aware of? Or on the flip side,
or did it drop?
Yeah, did a competitor set up shop down the street and that's going to impact them now? And are they going to change their advertising budget to offset that, whatever that looks like? And so trying to get as much information from the client as you can is going to create a more precise cash flow forecast. And depending on the client, if we talk about the vet clinic, you can be a bit less granular and a bit more high level, and it's fine because they're working with this cushion in their account.
They've got a war chest.
Yeah, they've got that war chest in their account, and we've helped them create what that looks like. Versus the other client that I've spoke about, you need to get very granular with them because $1,000 makes a difference on the timing of their payroll. If you've got a heavy week, payroll and rent and loan payments all in the same week, then $1,000 across 9 different locations, that's now $9,000. That makes a difference. And so trying to get as precise with that client is very, very important to me versus the vet clinic. You can be more high level, which I think kind of leads into even the revenue, because I was having a conversation with somebody yesterday about predicting the revenue within a cash flow forecast. And in the case of the vet clinic, on their cash flow forecast, I'm comfortable doing monthly revenue and putting that to the very end of the month, knowing that that's extremely conservative, but that, you kind of set up the cash flow forecast saying, okay, all of your revenue is going to come at the end of the month, and that's going to give you this much money to kind of still have in your bank account throughout the month. Versus the other clients, I forecast their revenue on a weekly basis, and you could go as much as daily basis if you wanted to, because they're a cash-based business. So what comes in is what's coming in. That's it. And so I actually, with them, again, I'm conservative. I forecast it to the end of the month or the end of the week, sorry, but I do a weekly forecast for their revenue versus monthly.
Yeah, and it's interesting because I deal with a lot of clients that aren't cash-based. They've got a lot of term, a lot of AR, a lot of sales that they don't get paid for 90 to even 120 days. That's just the nature of the industries that they're in. And so I find it really interesting because the way that I forecast is there's huge seasonality in that specific business. The winter time is much more profitable and lucrative than the summertime, or actually than the spring and fall. And so what I do is I create instead of trying to capture the seasonality, I actually just take a conservative level and say, what was the minimum amount of revenue that they earned last year? And that's just the same every single month. And then in that way, if they're going to double it, yes, I'll adjust the numbers. But it's usually very close within 10 or 20%. And so, if you're starting off at that base level, anything that they earn above that is almost gravy. It's like a bonus, which then allows you to manage their cash a little bit more. Again, it's me trying to be a little bit conservative with the numbers.
Yeah.
Which I think also goes back to what you're saying too, with the first question, which is this is something that's frequent. Like we're sitting here talking about something where, like the budget question, that could be like a whole day if you really wanted it to be. But the reality is that a lot of these questions are actually spread out over time. Like that initial question about the budget, that could be literally your only question. You get the budget back, but then that raises 2 to 3 to 5 to 10 more questions the next week, which then you put that back and forth and you keep iterating with your client.
Yeah.
And so I think that's something to be cognizant of. It's not this, I feel like we're making it sound like a mountain of work, but it's actually not, it's work in terms of having that extra dialogue with your client that maybe you don't have.
Yeah.
But if you have that, it gives you a ton of insight into other areas that you can help them in terms of tax planning and other strategies that you can implement too.
Yeah, for sure. And keep in mind that we're talking about, this is a client that you're already working with versus that kickoff client that right from out of the gates, you sold them on the full meal deal, including cash flow services. And this is totally a tangent, but about a month ago on this amazing group that I'm with. It's other firm owners. We were talking about how when you first start working with a client, and this particular person said something that really resonated with me. And he's like, he tells his clients that upfront, it's just going to suck at first because you're creating all new systems, all new workflow. Maybe they never even kept receipts before. Man, we're going through a client like that right now. He never kept any of his receipts. And so now to actually take pictures with his phone feels like a burden. I mean, it feels like a bit of a mountain because he never kept anything. And so the advice is, dude, this is going to suck for the first few months because it's an adjustment and we're setting things up. It's just like, setting that expectation. I love that because I was like, it does actually kind of suck. And I'm the one who glosses it over. It's like, this is going to be great. You're going to love this. It's like,
it's going to be so efficient.
And once you get to a certain point, it's going to be like that. So I thought that was a really real thing to tell your client.
Well, I think that's a great point because that client it is a super great point. Like, it can be hyper efficient depending on where you come from. But the reality is, if you've had terrible advice and nobody's made you ever do a single thing in your life and they've just done it all for you,
this will feel like
in a really poor way, any iota of work is going to feel like it's more.
Well, and especially when you're upfront trying to create a forecast and a budget or cash flow forecast, is that you've got a lot of questions. And in order to get something that's going to be of value that you can advise off of, you have to have that information in order to create those forecasts. So all right, next one. So this is in the conversations that we have around cash flow when we've got an ongoing engagement with a client that includes cash flow advisory. So let's start with, what are the first couple of things to look at and potentially change for the client if they're going to have a shortfall?
My favorite is expenses. That's my big.
Tell us why you think expenses first.
That's my big go-to lever, and I know there's a lot of people that disagree with that. But the reality is when you're trying to react quickly, and this is the position that I'm coming from, is to put context around it. You're working with a client that's in dire need, and they're literally living day to day. It's super hard for you to go out there and sell more. There's very few industries or businesses where you can just simply go out and you instantaneously get more revenue. If you could do that, you'd probably be the richest person on the planet.
Or why weren't you already doing that?
Exactly. That's exactly right.
There's a good question.
And so I always defer to people usually are a little bit more heavy on their expenses than they think they are. And so my first line of defense, the first lever I always pull is, let's check your expenses. Let's make sure they're in line and in check with where they should be. And that's a very subjective thing depending on the business and industry and margins and all of that stuff. But then it's also a question of, can you defer those payments or not? Like, it's not just the actual amount, but it's also the timing of it. Payroll, you got to pay your people. And so that's pretty much set in stone and it's your number one priority.
Rent.
And rent. Whatever you need to keep your operations going and functioning and the doors open. But there's going to be a subset of expenses that have lenience. And it sounds terrible to say because you're essentially putting other companies into a cash trap position. But it is the quickest and easiest way to alleviate a cash shortfall is to stop spending money, period. There's a whole other dialogue that comes along with that in terms of vendor dialogue and what does that look like and can you even do it and does that get you into legal battles, obviously. But to me, it's the go-to. There's a lot of room in there where you can shift expenses around in terms of amount and timing, and that'll open up some immediate cash. And then you can start moving on to things like, say, revenue. Do you need to sell more, or do you need to change your sales structure, or anything in terms of that revenue lever, anything you can do to get those sales going. And then if you can't, you can feel free to jump in here if you want.
No, I'll wait for you to be done.
On an operational basis, you're typically talking about profit and loss type numbers, operational numbers. And so sometimes you get to a point where you simply can't change anything.
Okay, yeah, don't go there yet.
Okay.
I know where you're going.
Okay.
I'm stopping you.
Stop.
Okay, so stop it.
Go.
I think you hit on the key points that I want to make sure we mention here before we flip to where I know you are going, which I call it vendor tolerance.
Yes.
And sometimes sometimes it's not that there's a cash shortage long term, it's a cash gap. And this happens frequently when you've got clients who've got their biggest expenses are things like rent and payroll, that they're paying up front, but maybe they're not collecting on AR till later. And so it can be a cash gap, which in the case of being able to push out a vendor payment, because that vendor has got some tolerance, then sometimes that's enough to alleviate that gap.
Yep.
Then the next one is that I want to touch on before you go there is
oh, but I almost have another point now.
Okay, perfect. Save it. I gotta get this one out. Is your AR. So I saw a post just the other day on one of the social media platforms about how far out into the future a lot of the AR clients or the AR accounts are sitting, and I can't remember the exact numbers around it, but the point being that a lot of times our clients are terrible at collecting AR. Terrible. Sometimes if you're even in a situation where you're on an AR, not on a pad agreement with your clients, you might not be very good at collecting your AR.
It's an easy trap.
I know one of our industry friends is like this, and sometimes that's the easy place to go. Is it's not so much increasing the sales, because I do believe that, or your revenue, because I do believe that takes longer, but can you collect sooner? And whether that's giving the bug that person call, or it's a even more incentive, like, look, if you pay it by the end of the month, there's a 1% discount, whatever that looks like. There's some opportunities in there if that's, again, a cash gap that you can close by paying some vendors slower, but also collecting some AR earlier.
And to that point, invoice on time. That's the starting point of anything. Is when we first started out, we didn't invoice on time, and I fully admit that, and it created issues. It absolutely did, which is probably also partly why we are so passionate about cash management. Is we've lived and breathed the other end, where we've scrambled and made payroll and all that fun stuff too, and a lot of that's centered around invoice on time and get paid when you were expected to. And like everybody else out there, we learned that lesson the hard way, and we don't do it anymore, and we haven't had an issue for like years and years. Like, probably if we're in existence for 5 years, it'd be 4.
Because that's when we put in pad agreements.
The implementation.
And that's, I think, something that you can, I think our next one is even about some action items. I mean, that can be some.
But I have to go back to my other one.
We're going to get back to it, I promise.
No, it's a different one. It's a different one.
Let me share this one, then I can give it back. I'll give you the mic. No, I lost my train of thought.
Yes.
That you can often, in a longer term advisory kind of piece, is that maybe your client is a client that doesn't need to have AR and have terms with their invoices. Great example of this is we have an IT consulting company who they were terrible at billing. They weren't getting their invoices out on time. They're still not great at it, but that they can. A lot of their clients are on a fixed monthly fee. They're the perfect client to say, hey, do you need to have these guys on terms? What if you put them on pad agreements and collect, either at the end of the month or beginning of the month, something faster than what you're collecting right now. So that can be an action item to work towards. Is that's not an overnight thing, but that's something that longer term you'd be like, and depending on your cash flow forecast, you might even be able to display that to your client. Here's what it would look like if you collected in 5 days, which is processing time, versus 45 days.
Sure.
And so that's another action. I'll let you have it.
Well, the one that I was going to go back to was in terms of prioritizing your expenses and vendor payments. Part of that is also prioritizing and implementing structure too, because I've had the one client where they were actually putting themselves into a cash shortfall by actually prioritizing the wrong things themselves. And so operationally, these guys had trucks, and so they needed to have drivers and fuel. And those were the 2 key things, and repairs, essentially. If your truck breaks down, you need to fix it to make money. Those were like the 3 key areas they needed to be spending money. And yet their employees were going out, and they had an expense system where if they bought something on credit card, they automatically got reimbursed. And so those people would go out and actually start prioritizing their own vendors because they either liked them or they had relationships or whatever that might have been. And essentially it turned into queue hopping. And so those vendors started jumping to the top of the list even before the fuel payments were made. And so it created this interesting situation where this company actually couldn't pay their fuel bill because they had paid, like their clothes cleaning supplier
Yeah,
who
yeah.
had huge
Like a new
tolerance.
pair of work boots.
Yeah,
or
exactly.
whatever.
It was
Yeah.
amazing. And so just even looking at the internal structure of the company itself, not just the vendors, but how they're actually flowing the actual cash outflows internally and what that looks like is a good area for prioritizing.
Yep, for sure. Okay, I'll let you go to where
Yeah.
I think you were going before, which was
not an operational lever,
Yeah.
which would be your balance sheet. Because sometimes you get into a situation where you can't change the timing of your inflows or increase your revenue, and you can't reduce your expenses or push them back enough, and you just simply are going to run out of money. And that's not a fun situation to be with, which then turns to your balance sheet. And so you've got assets, liabilities, equity, very key high level overview here. But one lever is, can you sell any assets, or do you have marketable securities? Is there working capital there that you can unlock in order to get cash in hand? Liabilities, can you do short-term financing, invoice financing, lines of credit, long-term financing, restructuring? Any of those would work. And at the end of the day, you're also left with equity. If you can't do any of those other levers, can you just simply go out and sell the business to a partner, or just sell the business even, which is another option.
Yeah, that's still another option for sure.
And I guess the point is that you're not stuck to just the budget and the expected cash inflows and outflows. There's other levers available, but they're much more strategic and maybe dangerous, so to speak, to pull, because they do have longer term effects. If you go out and sell, say, a truck, maybe that truck's used for producing revenue, and maybe you can get away with it in the short term, but long term, you do have to expect to drop your sales down.
Yeah.
Something like that.
Yeah, for sure. I mean, but that can be even a time, just using that truck example. Maybe that's time to look at that truck that you own outright at this point, but it's also got some repairs and maintenance attached to it. And maybe it's time to sell that truck, and then, when you need it again, something again in order to maintain that revenue, to lease something that then you release got monthly payments. Like, there's a lot of different things that you can look at. And I think, you can be creative around it. And I think those things tend to be, like I said, a bit more strategic, which naturally means that often not always, but often they can take a little bit longer, which means, okay, what can you do really short term? What can you do medium term in terms of advice about things like, somebody mentioned there, ACH, that's what I mean by pad agreements, is getting funds faster. And then things like looking on the balance sheet, what can you sell? Is there a way to do some financing, etc.?
Underutilized assets.
Yep, for sure. Yeah, great point. All right, so let's talk about the best way to present the cash flow to a client. So what is the best way to present cash flow to a client, in your opinion? Don't steal my example.
Graphically. I'll take a little bit of a different approach than I think where you're going to go with it. And to me, I go back to the process. I'm very much a process guy. That's probably going to come out the more we talk. It already has in other webinars we've done. Process. And that's just coming from a point of us trying to grow our firm. If the team's not on board and there's not a structure behind it, it's hard to grow. If you're a solopreneur, it's super easy because you know what you need to do. And so we're just geared towards processes because we have to be. And so I still go back to the easiest way to present a cash flow forecast to the client is a part of the process. And that's, in our world, part of our weekly bookkeeping routine, which is every single week we have dialogue with our client about, what AP should we be paying and what AR should we be following up on a very high level. And that's a super easy way to interject a cash flow forecast, regardless of how it looks, because it could be a spreadsheet, it could be an app, whatever. But that's an immediate point where you can just put it in there and say, based off this plan, this is how I believe you should be paying, or who you should be paying. And these are the people that I believe we should be following up on because they're way overextended and that's a large amount, or whatever that might be. So that's my commentary around that. That's how I present it. There's multiple ways to present it, and I know where you're going to go with it, so I'll leave it to you.
That's because I have this favorite example, which
it's everybody's favorite. I use it too. It's just not mine.
I hope I'm okay to. I always pick on this client, and so we did do cash flow forecasting using Excel for many years, and we shared that in our last webinar, even shared that template out to a number of people, and Excel or Google Sheets works to do cash flow advisory. We did it for years. But what was my example that I love to share is because with the cash flow on an Excel spreadsheet, I really just have this running tally of here's what the bank account is going to look like in the most right column. And, I try to make that as as visual as possible by, using brackets around negative numbers, even making those numbers red. And for a number of months, I was presenting this cash flow forecast to a client. The one actually that you already mentioned that, and we're really picking them on today, that overspends on their meals and entertainment consistently. And so with that particular client, they were often dipping into the negative. There was a lot of manipulation around who can we stall on our vendor payments, who could collect our AR on. And so months and months into doing this for them, finally, the client said to me, I don't understand what it means on your cash flow when the number goes into a bracket. And I was like, oh my goodness, maybe this is why you're overspending on your meals and entertainment, because you don't actually follow. And for me, and I'm sure for everybody listening, this is really basic. We all know what that looks like. A negative number in the red is not a good thing. Yeah. But for her, it just wasn't her world. She's a small business owner. This isn't her realm of knowledge, and so she was counting on me to be able to advise her, and I didn't realize that display was not enough of an impact for her to really understand it. And so I agree that anything visual, but then anything graphical for them to have been able to see, like, here's your zero line, here's where it dips below, would have had much more punch than months and months of a spreadsheet that didn't actually mean anything to her. So,
we're good.
Yeah. What do these mean was her exact, I don't understand what these mean. So it's unfortunate that's kind of become the joke in the office, but.
And she's super nice as a
side.
I
mean it with all the best intentions. She's created a great example for us. So thank you for doing that.
Yes.
Okay. So
she also, I think, created the visualization, I think, is pretty powerful, because people do get tied up on numbers and grids and P&L statements, and I find they just don't wrap their heads around it as quickly as they do with a simple chart. And if you can show a simple chart of revenues up, expenses are down, cash is going to increase, it's really as simple as that. And how can you boil it down to the most simple visualization for your client, because they might not be tuned into numbers and grids and tables.
And lots of times that we do have one client who, even the one I keep mentioning, I'm also picking on today, that's always in a tight cash spot. She just never looks at the cash flow until now we've done the graph. But when it was the Excel spreadsheet, she just doesn't look at it. She just trusts us.
I was going to say part of that's trust factor.
Tell me what I need to pay. And part of it would be that if it didn't look the way she'd hoped it would look, it was a little bit stressful for her. So she really just handed it over to us. So all right. So speaking of stress, let's talk about what we do in the case where we don't have good news to parlay to our clients. And I'm bringing this up because of two things. I mean, if you're just getting into cash flow advisory, you're starting out with a client that needs it desperately. You probably are going to have to tell them something they might not want to hear.
No, probably you will. You're going to.
And so, this has come up in some other conversations around, like, how do you have the confidence to tell that client, oh, sorry, you're right. You shouldn't be sleeping at night because you won't make your payroll next week. And so, I think I just want to share, what we've experienced, because we've both had those types of conversations and sometimes continue to have those types of conversations. And so what do we have for advice that we can give to people who are trying to give this information and they're a little nervous to do it?
Yeah, and I know we discussed this a little bit this morning, where you were probably even a little taken aback as to my response.
Well, I think if anyone on this webinar knows you, they might also be taken aback by
maybe. I always frame it as our business, because we're a part-time controller, part-time CFO. Essentially, once you're starting to get into this advisory, cash flow advisory space, I view it as you're going to have these. It's not probably, it is. You will. It's just when. Yeah. And so mentally, you need to prep yourself for that. And so the way that I do that is, I go into each client saying that I'm probably going to be your worst enemy. And I frame that for them. That's our discussion up front. I'm best friends with all of our clients. But there are situations where I've got one client that has, a chain of command. There's 3 or 4 managers that we report to and have dialogue with every single week. And there's a GM in that position. And myself and this GM, it's not that we don't get along, but we typically have very heated conversations week to week, because he wants to spend more to make the operations better. And my job is to rein it in. And I know that. And so the way that I prep mentally for that, because it is hard, it's super stressful for me to know that a guy's basically going to hate me forever. It's not a fun situation to be in. But the reality is that's my role, and that's what I'm getting paid for. And it gives me a level of comfort knowing that I framed it that way, and that I framed it to the client that way, and everyone's as fluffy as it sounds, very accepting of it,
Mm-hmm.
because they know that's what I'm going to do.
Mm-hmm.
And they know that's my job. And to be honest, probably part of the reason that we, kind of tit for tat each other so much is because he does know that. And he knows that the more that he can push me,
Mm-hmm.
it is a little bit elastic. And depending on the mood and the situation, I might give a little bit and take on other items. So there's a little bit of that dynamic. But these conversations are not easy. And so I know from, say, maybe the gender perspective is that people maybe would expect a guy to be
Mm-hmm.
more strong about it. But the reality is it's stressful across the board, because you're dealing with people that you probably care about because you're trying to help them.
Mm-hmm.
And they are totally hyped up emotionally because it's their baby and it's in trouble probably,
Mm-hmm.
Which is why you're having the dialogue in the first place. And so really prep your head around that. But it's not a bad thing.
Mm-hmm.
It's a good thing, because if you can get through the difficult conversations and create plans around it, those are totally the longest lasting, best, loyal, most awesome customers you'll ever have, because you help them get out of that, and you help them allay those fears and concerns that they had, and you help them win.
Yeah.
And you'll be a rock star in their minds for eons after that.
Yeah.
You can charge whatever you want.
For sure. Yeah, no, I think those are all great points. And, as I'm sure a lot of you have experienced, you do become friends with your clients. Whether that means you go out for drinks on Friday night, or it just means you really care about their business. I mean, their baby has kind of become the baby that you've babysat now, and you care about that business as well. And, I admitted that, I hate these conversations when it sucks. And it is hard to have the confidence to go in there and feel like, I don't want to tell you this. But the thing that has really helped me, two things. Number one is, in the back of my mind, the thing that always gets me through, once I've got some optics around the cash flow for the client, when it's going to suck, is, what if I don't tell them? What does that feel like? And I'm not saying legally or bankruptcy. I mean, that's potentially where they're going. But what I really mean is, what's that going to feel like to me if they don't succeed and I had something that I should have told them about and I didn't? And even though it's kind of like putting my lack of confidence aside to say, like, look, I need to tell you this, because at least I can sleep at night knowing that you know what I know, and I've at least shared that. And so it's kind of a gut check there. The second one, though, is, and this plays into cash flow advisory tools that we use, is it's not just about saying, oh, you're right, it's gonna suck, you don't have enough money. Then it's, what do we do about that? And so one of our beta testers with Helm has used this term, and I want to do a post on this, is he called it, it's just another fancy graph. And I love that, even though at the time it's like, hey, damn you.
Who you are.
Damn you. What do you mean it's just another fancy graph? But the point being is that I believe that it's you want to have more than just a fancy graph, because the fancy graph is going to tell your client, yep, you're right, you're going to run out of money next month. But then it's, what can we do about that? And that's it. The differentiator for me is that when I'm using the tool, I see that it's not going to be good. Now, what can I advise them on that I can help them with short-term, medium-term, long-term, in order to make sure that we can short-term cover off that gap or that shortfall, and then longer term, how do we not get here again? And so
get structurally better.
Yeah, exactly. And so that's also the thing that helps me get through it, is that I'm not just saying, you're right, it sucks, see ya. It's like, okay, now what can we actually do about that? And that's where you're going to develop the relationship with the client, to be able to say, I'm going to help you as best I can. Let's try to work through this, because then that client will value you for sure.
Yep. And I mean, at the end of the day, it's a relationship, right? It's
Absolutely.
like any other relationship.
Absolutely.
There's going to be ups and downs, and if you can make it through it, you'll all be better off.
Yep, for sure. Great. Okay, so we've got, oh my goodness, only 6 minutes left here. So let's answer some of your questions. Let me just pull this up here. Maybe. I think I'm going to have to stop to share.
No, I think it's in the top right.
That's the chat, which we can start with. Which is, now that recession is looming, cash flow is all the more important. Oh, that's an easy one. How do we get the recording? I'm going to send it out. It looks like that came from Gary. I'm going to send that out afterwards. And you're absolutely right. I mean, the recession is part of what really pushed us to do more cash flow advisory. Okay, so let's see. I'm just going to stop the share, and you can get the big view of your beloved friends here at 2080 and home. Okay, I would like to offer cash flow advisory services. Hey, stop, I'm trying to read. I'd like to offer cash flow advisory services to a specific client, but their industry is architectural, engineering, and construction. Their construction income expenses vary greatly month to month. Okay, so you know, one of the things that we love helping people do is really tweaking a cash flow for the type of client that you've got. And I think in this case, that's probably a good one, because not only is it that your income and expenses are varying month to month, but probably also, my gut instinct here goes to, you probably got some progress billing, and even some deposits or some upfront retainers or something of the sort, which do make cash flow a little bit more complex. Doesn't mean that it can't be done. It just means that you might want to structure it in a way that's going to best work for those particular clients. And even your architectural company versus engineering versus the construction might have some differentiators there in how you'd want to set that up. So because we're short on time, I'm going to say that this really is a longer question that you could almost get into each of these. But one of the upcoming webinars that we plan on doing is speaking to some of these different industries and how you can best set up cash flow for those industries when they've got things like progress draws and
because it's progress draws is a huge question. Then we've gone to how many conferences now? It's one of the top 5 questions is how do you handle progress draws properly? Because there's not a lot of great tools out there for that.
Yeah, for sure. So it looks like that came from Lawrence. So Lawrence, feel free to reach out to us if you want to have any dialogue around that before the webinar that covers that topic, because we're happy to do that. But yeah, for sure that does create some complexities. Are you able to share details of your cash flow advisory tools? So, I mean, for the most part, our tools really that we use are Excel. Before Helm, we used Excel and Google Sheets, which in episode 1, I shared the link to an Excel spreadsheet that we use, which honestly, I recommend that as a starting point with cash flow advisory, just because it gets you really thinking granularly about the ins and outs that you're going through that business. That is on our blog, to be honest. And if though you want some information on that, feel free to shoot me an email. You probably have got my email address, or connect with me. You're going to get an email from me with the recording of this particular webinar. So if you'd like a copy of that Excel sheet, just let me know. Outside of that, of course, we use Helm. Perhaps we're a bit biased, but
and our accounting system, because I mean, in terms of cash flow, I always look at cash management, and so you know, there's other stuff that comes off the cash flow forecast, like AP routines and AR routines, and those are just simple reports right now out of our accounting system. So we just print out an AP listing and an AR listing and literally go through those with the client. That's obviously where we want help to go over time, but not there yet.
Yeah, for sure. But yeah, for all of our cash flow forecasting now, we don't actually use Excel anymore, unless there's something that's creating some, you know, that will do something in conjunction with using Helm. But yeah, we're a bit biased now. We have to obviously use a system that we spent the last 1.5 years developing. So
it's our baby.
That is our baby. Wow. Isn't he or she cute? Okay, so we sent out a recording of the first episode. Why don't I do this? When I put together the email that's going to send us the recording for this webinar, I'll include the link to the first webinar, so you guys will be totally covered. You're going to have all the knowledge. And
so that's another question that we got on LinkedIn too, is if you sign up for one, do you get the whole
That's
series?
A great question, and the answer is no. The way that I've set this up is that you can pick and choose. I mean, we want you here for all of them, but you can pick and choose which webinars maybe excite you or what you need right now. And so no, when you sign up for one, you don't automatically get signed up for all of them. That was intentional. I realized that if you're wanting to sign up for them all, it's a bit of a pain in the butt, but the reason that we did that was so that you could pick and choose. But yeah. And then can I do the auto?
You saying for examples?
Yeah. So examples of the types of industries. Oh yeah. You're asking.
So he's offering to help us.
Oh yeah. Okay. Gotcha. Perfect. Let's do that. The answer is yes, Gary. Let's do that. And when I send out the email that's going to include the link to episode 1, that will get you to that Excel spreadsheet that somebody else has asked for. So
and keep in mind, it's a simple. We started from the most basic starting point possible. We have cash flow Excel spreadsheets that would dwarf the complexity of
that's really basic. And yeah, you're right. Before we had Helm, when we were trying to make something more complex, when you started to talk about some of these industries with draws and and even some of the cash versus AR type clients, we definitely tweaked it as we went, and made it more complex, and even created some visuals within Excel in some cases. But it's the basic starting point, and I'm happy to walk somebody through that if they want some walking through it. As we said at the beginning, we're open books, and we're here to help. So, all right. So I think we're right at 3 o'clock. The last thing I just wanted to share, two things. We're going to have our next one later in September. So feel free to join us then. We'd be happy to have you come on board. And then secondly is we have a Helm community. We called it Helm Community on Facebook. And the last few weeks we've been light with posting there because people have been on holidays and been busy, but I promise you that at least after Labor Day weekend, we're going to really kind of kick that off again and get some more engagement there. Questions that you've got, anything that you want to talk about in terms of cash flow, advisory, not even just cash flow, but just even advisory within that community. So it's the Helm community. I'll throw the link for that in.
And I think it's good to highlight that it's not cash flow specific. Like we do find that there's really good workflow community groups, there's really good QBO, there's great zero ones, but there seems to be a lack of a really good advisory stuff where, you know, people have these questions where they're just starting out. Maybe they're out of school, maybe they've just never done it before, but like, how do you do some of this stuff? And I know we've talked about this before, but there just seems to be a very common thread of a lack of how to in terms of what's beyond just the accounting system and what does it look like. And that's what we want the Helm community to be.
For sure.
Let's empower everybody by talking about it.
Let's share. Let's talk about things, and anything kind of advisory related is kind of in there. So
for sure.
Perfect. All right. Well, we'll wrap it up. We went 1 minute over. Sorry, guys. Thanks again for joining us. We'll see you next time.
See ya. Thanks for coming.